GoPro will report results this week, and to prepare, we're going to do our usual analysis, comparing the consensus estimates relative to management's guidance from the last earnings call. If you'd like to download our earnings model and follow along, it's available for free on our website, gutenbergresearch.com. You can click on the Models tab, scroll down to GoPro, and click the icon to download. And for the guidance, we'll be using the details from the Q4 earnings call. So you can open the investor from the investor relations page. You can open the last investor meeting slides and scroll down to page 6, and you'll see the full year guidance was only revenue, but they gave revenue, non-GAAP gross margin, and operating expense guidance, as well as adjusted EBITDA, and the guidance for restructuring costs of $5 million to $10 million. So we've already incorporated these details into our earnings model, which we can go through now. There's just a few things that we want to remind you of from the last earnings call. First, management challenged the reports that the company was reaching the limits of its total addressable market and that the competitive pressures were driving the poor performance in the fourth quarter. Instead, management was saying that it was really just due to the fact that the GoPro cameras are not that easy to share the content with. And as a result, the company created this big push in 2016 to launch a new software package called GoPro for desktop. And this should improve the offload, access, and editing capabilities of the cameras. So that's one thing we'll be interested to get an update on this quarter. In addition, the average selling price was well below expectations in the fourth quarter. So if we take a look at our model, you can scroll down to that section and see that the average selling price per unit went from $271 in March to $255 in June, then down slightly to $251 in September, then it dropped down to $218. So in 2016, we know that they discontinued some of the lower tier Hero models, and that happened actually in April. And they're going to launch the Karma drone in the first half of 2016. So that should help the average shipment price later this year. For now, we kept the average selling price at $218, consistent with the fourth quarter in the first quarter of 2016. Okay, so next we can go through the guidance that management gave us in the press release, or excuse me, in the investor slide. So first of all, they guided revenue between 160 and 180. So the street is now looking for 169 million for the first quarter, which is right at the midpoint of management's total guidance. On non-GAAP gross margin, they expect it to be between 35 and 37%. So you can see this 36% plus or minus 100 basis points. And we set that at the top end of the range, and that's so we could get back to the consensus EPS estimates. So we are at 37%. So that 36 plus 100 basis points. Then for the non-GAAP operating expenses, management expects them to be 165 to 170, and that's excluding the $5 to $10 million of restructuring expenses. So for the restructuring expenses, we just popped that down here in our non-GAAP section, and we're going to add that all to OPEX. So we didn't put any savings in cost of revenue. You know, there might be some kind of split between the OPEX items and cost of revenue. It really doesn't matter. We're just using that to get down to our net EPS number. So so we set the total OPEX, excluding the $7.5 million of restructuring costs, equal to 165, which is the low end of management's range of 165 to 170. And then finally, they give us adjusted EBITDA of a $95 million loss, plus or minus $2.5 million. And if you scroll down to our adjusted EBITDA section, you can see that we fell within that range at $93.4 million loss. So we didn't hit this exact $95 million loss point, and that was really just because we were trying to get back to the consensus EPS estimate. So you can see that using management's guidance, we were in fact able to get back to it. It's the guidance is not at the midpoint of the ranges, but all in all, we would say going into this release, consensus estimates are in fact in line with management's guidance. Then if we look to the full year, they only gave us the revenue guidance, so 1.35 billion to 1.5 billion. And if you add up the four the sum of the 4 individual quarters of the consensus estimates, that does in fact get back to the range that management gave us. So we're okay there. And then on the call, they didn't actually put this in writing, but on the call they did say that they expected OPEX to grow sequentially each quarter. And you can see that we have positive growth. This is just a quarter-over-quarter growth rate. So we have positive growth in each one of the next 3 quarters through 2016. So all in all, the street is in fact in line with management's guidance heading into this release. And if we just take a quick look at the valuation, after the report last year, we had to change our valuation approach because the company is not going to be profitable on a net basis in the near term. So rather than doing a price earnings based multiple, we are using a price to EBITDA multiple, and they're not profitable on an EBITDA basis either through 2016. So we had to go out to our 2017 EBITDA in order to value shares. So right now, on an ex-cash basis, they are trading at about 15 times the 2017 price to EBITDA ratio. And we'll keep this metric the same, constant, after the press release this week, and we'll update the details for the March quarter and any additional guidance for 2016 that management gives us, and then we'll see what the new valuation is. So be sure to check back after the release to see what the new earnings expectations would be and what the new valuation is. Thanks for watching. Good luck with the release, and good luck with the rest of earnings season.